All right, let's get into it. Today, we're basically becoming financial detectives. We're going to crack the case of one particular stock, Cipher Mining. We're diving headfirst into a technical analyst report to figure out what is really going on with this company.
So, here's the central mystery we're trying to solve. Just imagine you see a stock on your screen that seems to just defy gravity. It shoots up over 120% in only a few weeks. The first question you're going to ask is, what is happening here, right? Is this just hype? Is there something real behind it? Or is it something else entirely? Well, that's the question we're setting out to answer.
And just to really hammer that point home, this is what that looks like. According to the report we're looking at, the stock went from a low of around $9.88 to a high near $22 in just a few weeks. I mean, that is an absolutely massive move. So, where do we even begin to understand a surge like this?
Well, every investigation starts by laying out the basic facts. So let's dive into Section 1, the mystery.
The company at the center of all of this is Cipher Mining, and its ticker symbol is CIFR. Now, one key piece of context here. Cipher is a Bitcoin mining company, so you can bet its fortunes are pretty closely tied to the crazy crypto market. The report we're analyzing calls its trend strong bullish, which is really just analysts speak for a powerful upward movement. So the trend is obvious, but the story behind it, that's what we're here to figure out.
So let's start building our case. Section 2 is all about the first rule of any market investigation. You gotta follow the money trail. And we're gonna do that by looking at the price and, maybe even more importantly, the volume. Now take a look at this, because this is where it gets really interesting. The report points out that on the days the price shot up, what analysts call rallies, the trading volume, which is just the number of shares being bought and sold, also spiked. You gotta think of it like this. Volume is the fuel for the fire. High volume on a day the stock is up suggests that the buyers are serious. They've got conviction.
Now, to get a bit more precise about this interest level, analysts use a pretty cool tool called relative volume. It's a simple idea, but it's powerful. It just compares today's trading volume to what's normal for the stock. If you see a number over 1, it means way more people are paying attention to it than usual. It's a big, flashing sign that says, hey, something's happening here.
And for Cipher Mining, the report gives it a relative volume score of 1.28. So here's the key takeaway. This isn't some random price drift. There is significantly more attention and more money flowing into this stock than normal. And that confirms that this upward move has some real power behind it.
Okay, so we've established the trend is legit and it's got some real energy. Now let's pop the hood and open up the analyst's specialized toolkit in Section 3 to see exactly what's driving all this momentum.
The first tool we're going to pull out is moving averages. The concept is pretty simple, actually. They just smooth out all the chaotic day-to-day price swings to show you the real underlying trend. I love this analogy for them. Think of moving averages as the center of gravity for a stock's price. A healthy, rising stock should be trading above its center of gravity.
And this slide just lays it out perfectly. Look at the data here. The current price, 2066, is just floating way above all its key moving averages. I mean, it's not just above the short-term one at 1840, it's miles above the long-term, 200-day average of $6.26. This is a classic, textbook bullish signal. It's like a rocket that has cleared the launch pad and is just accelerating into the sky.
Okay, deep breath. This next tool is, well, it's a bit more complex. This slide shows just a handful of the dozens of technical indicators that analysts look at. I know it can look pretty intimidating, but don't worry. We are not going to get lost in the weeds. We're just going to pull out the main story this data is trying to tell us.
And the story really has two competing sides. It's like a tug of war. On the left, you've got these clear signs of strength. Indicators like momentum, PPO, MACD, they're all flashing bullish. But on the right side, you see these signs of caution. For example, that CCI indicator says the stock is overbought. A good way to think about that is like a rubber band that's been stretched way too far, way too fast. It suggests the price might need to snap back a little before it can keep going higher. So you see, it's a battle between strong momentum and the risk of burning out. And all of this brings us to the really critical part. With all this conflicting data, how on earth do analysts try to map out what might happen next? Well, welcome to Section 4, Decoding the Future.
So to try and predict where a stock might go, analysts first have to identify key price levels, and the two most important ones are called support and resistance. Honestly, the easiest way to think about them is as a floor and a ceiling. Support is the price floor, where buyers tend to jump in and stop the price from falling. Resistance is the price ceiling, where sellers tend to show up and take profits, stopping the price from rising.
And for CIFR, the report identifies these exact battlegrounds. The ceiling, that resistance level, is at $20.86, and the floor, the support, is down at $18.18. What happens next with the stock really depends on which one of these levels breaks first.
So let's play this out. The report lays out a few possible scenarios. The first one is the bullish breakout. If the buyers are strong enough to punch the price right through that 2086 ceiling, the report suggests the next target could be that recent high of around $22.
But of course, there's always the other side of the coin. Scenario 2 is the opposite, the bearish breakdown. If the sellers take control and shove the price through that 1818 floor, the next stop on the way down could be around 1709. And that would be a big signal that the upward momentum has hit a wall.
And then you've got a third possibility, which, happens all the time in the market. It's the neutral scenario. This is where neither the bulls nor the bears really win. The stock just kind of bounces around between the floor and the ceiling, taking a breather and waiting for the next big push, one way or the other. So, we have the clues, we have the tools, and we have the possible scenarios. And that brings us to our final section, the final verdict. What's the report's ultimate conclusion after looking at all this?
And here it is straight from the source. The conclusion is really a balancing act. It confirms, yes, the trend is strong, it's driven by that momentum in those moving averages we looked at. But it waves a big yellow flag warning that the high volatility in those overbought signals mean a price correction or a pullback is definitely possible.
So let's just break that down into plain English. The big takeaway is that the upward trend is the real deal. There's a lot of evidence backing it up. However, and this is a big however, the stock is stretched pretty thin and it's moving wildly, which really amps up the risk. The report kind of captures this whole tug of war with an overall score of 68.72, which is positive, but, not a slam dunk. And that really leaves us with one final thought. The analyst has laid out a clear case where you have this powerful momentum clashing head-on with some pretty serious warning signs. We have a clear picture of opportunity balanced right against risk. So the only question left is, what does that picture mean to you?